Euro currency declines for the second straight session as today we heard from Federal Reserve Chairman Jerome Powell. He talked about possibly raising U.S. rates more aggressively than previously thought, given the state of where we're seeing the high inflation and the Fed's optimism about the potential for more growth, enabling them to be more aggressive and avoiding any kind of recession. Well, if you're going to take the rates higher in the U.S., the dollar's going to move higher, which we saw. We saw Treasury yields moving higher, which they did, and we saw the euro currency moving lower. We saw a basket of currencies moving lower against the dollar today. Not huge moves, but certainly significant enough. We took the euro all the way down to 110. That's going to hover us right around the midpoint of the month of March, which is seeing trades from as low as 108 on March 7th and as high as 112. So at this point, kind of seeing the market waiting for that next catalyst event, whether it comes from someone at the ECB or someone again from the Fed, has yet to be seen. But we have a lot of Fed speakers this week, so it'll probably be more dollar dependent as we see flows coming in and out of the euro based on what we're hearing from some of these Federal Reserve governors and the Fed chairman himself. He speaks again this week on Wednesday. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility was rising today as prices were declining. It did the same on Friday. So that seems to be a new trend forming. Lower prices as we are hovering very close to the low extreme price that we saw in March down here. We are seeing volatility move higher as prices move lower, and as prices have moved higher in the month of March, we've seen volatility coming off. So kind of that inverse relationship, higher prices, lower volatility, lower prices, higher volatility, and that's exactly what we saw today. Don't forget the fact that there is still a lot of uncertainty and a lot of risk out there. We talk about central bank risk, economic risk, geopolitical risks. They are all still out there. Despite the fact that we did get through one central bank meeting with the Fed and they did raise rates, it looks like there could be more on the way, more aggressively anyway, than the market had previously intended. So lastly, let's talk about positioning. What are the speculators doing? Well, prior to FOMC, it's as far back as our numbers go, speculators were exiting with both hands. Now, they still remain net long. Recall at the end of 2021, Euro speculators were net short and then got long as we got into 2022. Right now, we are still seeing them net long, but a lot less, given the fact that they unloaded a lot of their positions prior to FOMC. It'll be interesting to see where they are now as we get this Friday's CFTC report. It'll give us information covering what happened over that Fed meeting last week when the Fed did raise 25 basis points, the first rate hike that we've seen here in the States since 2018. So the euro currency starts off the week exactly where it went out last week, nudging lower, hovering at 110. That's the midpoint of the March range.